Whole story.
Welcome back. You're watching Morning Prime, and I can assure you the conversation happening during the break is as economic centered as what you've been listening to back at home. So do stay with us. We've just entered the final 30 minutes of the show as we finalize on a couple of issues. Right before the break, a controversial matter had been highlighted, and Derito, kindly respond before we shift focus to Marta's tax and GDP ratio.
Feel-good factor that Professor raised. You know, when we talk about business confidence, consumer confidence. Mm-hmm. So the question, I guess, is asking why isn't there a feel-good factor, right, and it is so early in a new regime? Well, frankly, as people on the street are saying, the leadership is not inspiring confidence. It's not giving people hope. As a person, I can only summarize in this following manner. You see, if you keep telling untruths, and I can see you're telling an untruth, even tomorrow when you talk, I may look at you, I may even clap politely, but in my heart, I probably believe that you're telling an untruth. And that's what is hurting this administration, because the senior-most people are repeatedly saying things that are harmful, things that are generally untrue. And the difficulty in today's age of communication and so on, you know, you could tell me a figure, for example, like you see the president came out, his advisors came out saying, we have stabilized the economy. Can you say that? Mm-hmm. Then the following day, the economic data is showing differently. Or you come out and say, I have reduced the budget. Then the figures you table in parliament are showing a different story. Or you say, I'm going to do, we say in this big English, fiscal consolidation, meaning I'm going to try and reduce the budget deficit, but actually you increase it. All these things go to erode confidence, and I think that's why that confidence is not there. On the informal sector, and I think our moderator asked this question earlier, the bulk, 80% more perhaps, of Kenyans work in the informal sector. And the failure, not just of this regime, but I would say even previous regimes, have failed to focus government effort and attention to the informal sector in order to make it more vibrant, more innovative, and facilitate its growth. Instead, many of the things we do, in fact, hurt the private sector. I give you one example. In the tax proposals, it is proposed that the cost of importation are lowered. There is a fee, when you import, there's a fee called import declaration fees, which is 3.5%. It's proposed to come down. When you transport the goods, there is a railway development levy, which is not supposed to go down. On the surface, that's okay, but it favors imported goods. It does not favor the goods that are being made at Kariobangi Light Industries. It does not favor the goods that are being made here in the industrial area. It does not favor the goods that are being made in Dagoretti at the furniture cluster.
Or
the BJ50
yes.
tuk-tuk being made in Nyahururu. It is favoring imported goods. Now, when you consider that in India, in China, in Vietnam and other places where these goods are coming from, the cost of fuel is lower, the cost of electricity is lower, so those goods have an advantage, and you're giving them even more advantage over your own goods. And then, to sort of add insult to injury, you have decided any hustler who is selling more than 500,000 shillings per year, mark you, that is like 1,400 shillings per day. If you are selling eggs or whatever, selling bananas. If you are selling more than that, you have to pay taxes. And now you will not be paying at the rate of 1%, you are going to be paying at 3%. And this tax is on the top line, is on your revenue, your sales. So whether you are making a profit or not, we don't care, you still have to pay. No wonder Kenyans are angry.
I think,
sure.
First of all, I must go back quickly on the feel-good thing. I think Kenyans are still feeling good. Last night I sat up late, and as I was flipping through YouTube, I saw a Kode's wedding. It looked very flamboyant. So actually, dialed in. And you can say, this is a woman with 5 children or more. Some of the maids are her daughters. They're grown people, upper teens, I think they seem to be. And this is maybe her 7th marriage, maybe 5th, I could be wrong on that. And Elizabeth Taylor came to my mind. You know, Elizabeth Taylor, I think, married 7 or 8 times. And she was always upbeat and so on. That upbeatness, we need it in our people. You know, it's never too late. So we have still got a good...
But economically, not in weddings.
Yes, exactly.
No. Feel good exists inside you. Even when you are... do you know if you visited somebody in some of the low-income areas, you arrive, you'll get tea with bread and meal will be cooked. You go to Karen and you might just chat over water and go home. So, you know, I feel good. And then the second thing I wanted to touch on is on the issue of budget deficits and the debt thing. The weakest link is not the executive proposing. I mean, they have their wish list. The weakest link is Parliament managing the deficit. And the dynamics inside Parliament that allow them to pass budgets with large deficits is such that must be contained. I have served there, I've served on committees, and I saw how sometimes lightly issues can pass depending on what is offered inside the budget. A road in your area or a dam in this place or something that you might have. And then, you know, there's lobbying and then it's passed. I think that's a weak link. It must really change. I just wanted to clarify a bit on that. But this debate will carry on. But I think we should. The message to the president now would be that you are going up, hopefully, to get a grip and then come down as quickly as you can begin to come down. Revenue side is one of the weak projections, one of the very light projections that are made. At the time of making the budget, when it goes to Parliament, the revenue estimates are shown to be high, so that the deficit is not that big. In fact, usually KRA performance has been lower than that. So somewhere 3 months later, 4 months, it was expected quietly. You have to go back and say, now that we are unable to meet our revenue goals,
let us revise.
Let us revise. And that's
How was supplementary budget?
Yes, and that's a real challenge that there is. The 1 year they did very well. You have data there, you might see this, was the COVID year, which surprised me. Our revenue performance, the COVID year around 2021 or something like that, was much better than the historical highs. And I don't know what happened, whether they just got efficient, whether the leakages were sealed voluntarily so that the numbers showed up. But that, I think, encouraged the incoming president to say, you can actually collect more. So there has been a push, and I think that push should have the advantage, not necessarily of raising taxes at the end, because taxpayers will respond better. But tax management may have lower leakages and so on. But, you know, I'm sure that our tax people, and they know very well the issues of elasticities around, you raise a shilling of taxes, what you get down in revenues. It doesn't translate on, it's not linear, and they know that. So usually there is some place else. And long time ago, and I don't know if it is gone yet, the projections that were done by Treasury on their expectation of revenue was generally much less than what central bank would say is going to be collected. And even after the collections, the remittances from central bank to Treasury were less than was expected. And then between KRA and central bank and Treasury, the numbers have never been reconciled, I can assure you. So there are some inherent inefficiencies. And so when you see the president pushing hard, he's not necessarily pushing hard on the final taxpayer. He's also pushing hard on these intermediate complications that never come out right. So I do hope that with this tightness, people will be much more accountable at all levels.
Okay. Well, he's talked about the budget deficit. I think as you perhaps reply, kindly speak to the tax to GDP ratio and some of the realities around these figures.
I think that's a very interesting observation. But if I can have a rebuttal for my colleagues here, why tax revenues went up during COVID-19? To me, as an economist, that's a very clear indicator that economic stimulus can work. You remember the list of stimulus that the president gave, and then the tax revenue went up. Probably shows clearly that when you look at this so-called finance bill 2023, we probably need to borrow something from the COVID stimulus package. We might end up raising more taxes. On the tax to GDP ratio, I listened to the president. He says he wants to move it from 14 to 16%. And then he argued that in some countries like OECD, the rate is about 34%, which to him shows that Kenyans are not overtaxed. That is persuasive until you ask the question, who pays that tax? It's usually the people in the formal sector. People in the informal sector don't pay a lot of taxes. And that is why he is lowering the burden so that more people can pay taxes. Number two, we should be asking, you only pay taxes because you have money. So one of the reasons why we don't have a lot of tax being paid is because people don't have the money. Remember that tax is what you pay on your profit or your surplus. So I was looking, I pulled some data from the internet, and I was looking at the per capita income in a number of countries. In 2021, Kenya was $2080. In Sweden, it was $61,000. In US, it was $70,000. And in UK, it was $46. So $46,000. So these countries are much richer than us. So by extension, you expect them to have money to pay. So if you want Kenyans to pay more money or more taxes, which I agree, then make them richer. Make it easy for them to run businesses, to expand their business. They will automatically pay you more taxes. So I have always argued that the best way to get more milk from a cow is to put music to it, not necessarily whip it.
You have to feed it.
And I would add to that feed it well.
And I'm sure you own a cow.
And I own a cow.
Quite a number.
Yes. Feed it well, and yes, play music to it. Don't whip it, and it will produce the milk.
Gentle music.
The thing about this tax to GDP ratio, again, is one of those areas that we disagree with our colleagues from the IMF. As well as their disciples within Treasury and Central Bank. And by the way,
I think moderator should force Director Mori to tell us who those disciples are. Because we had 12 disciples of Jesus, so if there are any disciples, they should be named.
No, I will. I mean, there is no. It's not secret. The current governor of Central Bank came from IMF or worked in IMF.
The replacement.
The proposed replacement, my good pal, Dr. Thuge, is ex-IMF, and of course had been a treasury. I myself should own up, and I think Bunyasi that I was in IFC, which is part of World Bank Group. And we disagreed with IMF all the time throughout when I was in IFC and when I have been in government. And you should always ask, where have their prescriptions really worked to make a country better off? The tax to GDP ratio is an indicator to give you order of magnitude, but you have to be careful how you use it. It's like the idea of an average. You know, if you use average wrongly, you can make really terrible decisions. Prof and my colleagues, if your head is in the oven and your feet are in a freezer, on average you should be okay. In practice, you are long dead. So, tax to GDP is 17% in Kenya. But you have to ask yourself, what is the composition of GDP, which is the point that Iraq is asking. The government sector is a very large contributor to GDP. Okay? But a road does not pay taxes, at least not directly. If you look at throughout the Jubilee administration, the key driver of the increase in the GDP figure is the expenditure on infrastructure. So although this figure is growing, and that's a good thing, you cannot presume, therefore, you will that it should your amount of taxes should be going up. How can it? Yet your government cannot tax its own investment projects. So although it is 17%, if you want the total figure to be a larger proportion of GDP, you will have to tax Kenyans in a rather desperate manner, like you are attempting to do with this finance bill. And I go back to, why is this finance bill controversial? I think it is because it is, first of all, going to some spaces where we haven't gone before, chasing the hustler to any corner that the hustler might be found, which perhaps we haven't done before. It is, it has some definite and known points of increase in terms of cost of living. So even though the administration or the regime is saying we are pro-poor, the tax measures will definitely hurt the poor way more. And I think that's why it has become controversial.
What shall I say? Yes, I think the fact that the tax bracket is expanding, so many more people are beginning to pay taxes for the first time, or an aspect they didn't pay much before. So that they're likely to make noise. That's one. Two, the fact that we have only 3 million workers, I think, in the formal economy, was it? And about 16 in the informal economy. Has serious implications. It means that in the workplace, you don't get support for social protection, in the, insurance, workers' insurance, workers' compensation, retirement benefit structures that you get in the formal economy, collection of taxes as you do. Anybody who is working in the formal economy pays on every cent they earn. Those in the informal sector do get away with it. But that expansion must occur. When it does, there's going to be a lot of noise.
Okay. Anyway, as we continue, we have to excuse one of our guests. He is rushing for another engagement, but thank you so much for your contribution. Perhaps your final comment as we finalize. We didn't get a chance to talk about Kenya's stock market because I had some data from the Capital Markets Authority that sort of shows we've recorded a 6-year low of 30.1% in foreign investment. So why are foreign investors fleeing the Kenyan market? Is it perhaps because it's taking too long for foreign exchange remittance? Where would you pin or juxtapose this particular issue as we find out?
I mean, frankly, I haven't looked at the data, but what I would guess is like this. You see, interest rates are going up around the world, particularly in the US. The interest rates in the US are very, very important because of the way the dollar is dominant. Assets that are in the US or denominated in dollars tend to be more attractive. So when the interest rates are going up in America, what you expect is that it is pulling investors into that market. And I would not be surprised if that is, I would expect that is the reason that investors are leaving, say, the Kenyan market, or you are seeing less foreign participation in the Kenyan stock market.
Okay, well noted. Asante sana. Allow us to excuse you.
Thank you.
Thank you so much. Exen, I'll cross over to you rather briefly. Perhaps add your voice to that stock market issue from where you sit, because we even have the Kenyan shilling that seems to be dwindling against the dollar. How do you read the intricacies around the foreign stock market?
Remember that the investors in the stock market have alternatives, and they always look for where they get the highest returns.
Yeah.
So when you find them removing money from the Kenyan stock market, they must be taking somewhere. And Mheshimiwa has mentioned about the US interest rates, which make it very attractive for people to invest there. But I also see other factors that are chasing away foreign investors. One of them was what was happening last year. If you remember, as we went to the poll, there was a lot of uncertainty on who was going to win. and who is going to lose for that matter.
Yeah.
So we got a new president, but when you look at the economic trajectory, there are still a lot of uncertainty. That's why financial bill is bringing out of controversy, and there are a lot of economic issues that are not very clear. So if we had a very clear economic trajectory, we know exactly the economic policy we are taking, which might now come after the budget, I see them coming back. But number two is when you see Moody downgrading the Kenyan economy, which is public, when you see public information that the government cannot pay its employees, we are sending message to the investors that things are not very good. So our public image, in addition to what is happening in the US, is probably what is chasing a lot of investors or in the stock market. Because people don't put money in the stock market just for the sake of it. They want some returns. And if they feel they're not going to get the expected returns, they can always take that money elsewhere.
Okay, fair enough. As you heard your voice, I think we should equally talk about the opening of the Kenya-Somalia border. Just briefly, what it means economically for Kenya, because we heard from the president during the joint interview saying, these issues of smuggling goods, perhaps sugar, at the border points, it would be proper to have something formal so we can actually, if it's instituting taxes against that, then why not?
Yes.
So add your voice to that.
Yes, thanks. I've got a comment on that also. Let me start on the issue of why the stock market and why the people may be moving. Certainly, Professor Iraqi has said those of the stock market are comparing their earnings with alternative earnings. They can compare their earnings across countries and they can move their capital across countries. The US has raised interest rates about 5 times since January, 4 times since January. And I can assure you that the Europeans were nervous, the Chinese, were probably going to be happy, they will move their money in there. But each time you raise interest rates, you destabilize the market. You cause others to have to do something else to retain money. Others' money will move and so on. So for us, that's what is going to, for foreign investors in our stock markets, they want to move their assets in the dollar area in instruments that might benefit from increased interest rates out there, so that their earnings are not, their shareholders will be unhappy otherwise. But it also tells us something. The nationality of capital is important. It's all good, we want to follow our heels about foreign direct investment and so on. But there are implications when they reach a certain size of your economy. They have a voice that becomes unpalatable. You lose sovereignty in that point, not just in Kenya, but everywhere it happens. And that's why countries like India, as I said earlier, resisted strongly, completely internationalizing the entire economy, particularly sectors they thought were sensitive. And they were not sensitive because of telecommunications or the kinds of things we worry about. Food security are kinds of things that they worried about. Social protection aspects are the things they worried about. So the population was not exposed to a point where they can rise and destabilize the system. On our domestic level, I think we really must cut our budget expenditure so that we have lower debt so that we have headroom to do other things that will be responsive to our debt. But let me go to the Somali border issue. Yes, first I think we must formalize crossing points between us and Somalia. And generally speaking, we should formalize crossing points between us and neighboring countries, so that we can manage our trade policy, our forex things, and so on. Contain smuggling, because smuggling has implications for tax payment, but also for competitiveness of actors inside the country. And the Somali border has been notorious for a very long time. And let me tell you, sugar smuggling is huge money, very huge money. And so each time we neared elections, generally, the smuggling rate levels went up because we wanted to finance their own elections and so on. So it's good news that we're going to formalize. But it will be a challenge. But if you control the principal crossing points, the smuggling through informal points will be relatively small, or at least small quantities at a time. Like it happens, I know that in Busia, the Busia County and it's with Uganda, they're still crossings on a bicycle or now on a motorcycle and so on. They can add up to aggregate. They can be aggregated to something, but it's not a whole truck crossing through the bush. Those are, they have to cross through formal crossing points. I think that's a good development in along the Somali border. And I would add there that I hope that as we go forward, we'll provide an incentive for the host counties on the border to retain some of the revenue collected. That will give them an incentive to increase collection, I can assure you. But they can't be the ones, they cross through their territory and you take all the money to Nairobi and distribute differently. That local incentive should be added.
Okay. Add your voice as we finalize.
Very interesting. I saw that as a very good move because one way to pacify Somali is to trade more with them. If you look at the European Union, when Europeans started forming the European Union, the economic community, there was less war in Europe. People started trading and you cannot fight people you trade with. No. So I think that's a good move. In fact, we should even go beyond opening the borders, the border crossing points. We should make Somali a part of East African community. And I think that proposal is on the ground. Because as far as I'm concerned, with 17 million people, Somali to me is a market. And we should exploit that market. We should take advantage of that market. So maybe very soon we should get a highway from Garissa, one going to Mogadishu, another one going to Kismayo. And we should have a ferry from Mombasa, around going to Kismayo. Because worldwide, you trade more with your neighbors. And Somalia is our neighbor, whether we want or not. So the sooner we formalize the trade relationship between the two countries, the more peace we are going to enjoy, and the better for the two economies.
Okay. Well, some were arguing that perhaps which one takes precedence, the insecurity risk with, formalizing and opening border points, because that's why it was closed initially, vis-a-vis the economic.
We can do them simultaneously.
They are interrelated.
They're interrelated, okay. Gentlemen, thank you so much. Objective analysis. We've castigated where we needed to, and we've complimented and patted those in command at the back when it was needed. Asanteni sana. Sakwa Bunyasi, the chair of the board Vision 2030, as well as Professor Ekseni Raki, an economist and lecturer at the UN School of Business. Equally, in absentia, Ndirito Mureithi joined us. He's an economist and financial markets expert. Thank you so much for watching. Hope you're adequately informed about matters economy and what's making news. My name is Jesse Rogers. Enjoy the rest of your viewing. Good morning.